Is it that time again? It is. Time for the next good trade of the track record. And guys, that one was a quite exciting one. In German, we call it ein Tanz auf dem Vulkan, which means like it was a dance on a volcano. Let me show you. Pretty cool, actually. And there's a ton of learnings in all of these trades. I'm just learning by looking at them one more time like that. I love it. So here we go. This one is on the Euro Swissy. One more time, we start with the weekly structure. By now you should understand and get like the idea behind the trades, right? It's always the same. So we can see on the weekly, we have like here the move was down more and then a correction. And the problem or the challenge with this structure is that it wasn't a very clean one, right? Like this one here is much cleaner, much more simpler to follow and understand. Here, we had like, okay, so it found a bottom here, went down, didn't break lower, and then it went back up very, very strongly. But then it's sort of like convoluted, right? Like not really, does it want to go up, does it want to go down? Like we really don't know too much, right? It's not as clear anymore. You know? And it did break eventually up, but it had a very strong reaction to the downside again. So in those kind of scenarios, instead of relying on market structure alone, I look at the zones. And remember, the zones for me are important because they are basically formed by how many times they have been tested before. So there is a statistical significance by that fact alone of how many times that price has been visited, let's just say. And that's why, when it's not as clear as here, that's why we focus on zones then more, okay? And going down to the daily now, again, right? So from weekly to daily, we do the same every single time. That's the whole point of having strategy and rules and having tested them so thoroughly before, knowing that they statistically work out so that we can trust them and actually become more confident in executing them than with anything else. Here we go. On the daily structure, we see obviously also we had a big break to the downside. Now, the idea of the trade was like, this looks quite strong. And we had like a bigger move to the downside first. So maybe this whole thing up was just a corrective move. And usually what we see after like this big move is a bit of a correction to the upside before it might actually continue the underlying even bigger, longer trend, right? And our idea was, okay, I want to trade this counter trend, you know? Right now, the daily structure is still rather bearish, right? Because with this strong move here, like the momentum is clearly on that side. Slightly bullish is the fact that the daily is trading above the EMA and SMA. So I'm focusing on these three important zones. And they are essentially how I am managing or identifying and actually then also executing this trade. On the 4 hour, we can also clearly see that the structure is bearish. I mean, look, it just broke and then actually had a gap here that was a weekend gap. And that's also part of our target. I'll get to that in a second. So we see that it went from this zone, 96.80 to the 96.30 more or less, very quickly, right, on the 4 hour. And now the whole trade idea, going down now to the 1 hour, is that if that level holds, right, then we could be in for that retest before it goes further down. And that retest is what we wanted to trade, right? And that's exactly what happened. So what happened here? We also see that this gap was aligning with the other zone perfectly. So this is our target. Again, 1 to 2, nothing too fancy. So we see like, okay, it's testing the zone, went down, went up, it held actually. This is close candle on the hourly, higher than what we had closed here, went up, went back down, but then went back up. So that structure essentially, well, like it was playing around, a consolidation around the zone. And because it consolidated for a while, that was, like I said, a dance on the volcano. Here you have the dance, ladies and gentlemen. Is it going to down? Is it going to go up? You know, that's exactly the dance that we have been doing here. But again, based on a clear method. And I can show you also again. So this was the gap, right? Here we have the 1 hour chart. And then why did I choose this level for an entry? Because that level had been significant even on the 1 hour chart. So basically what we did is we adopted what we usually do on a bigger time frame, on a weekly, on a daily, and we applied the exact same principle to the 1 hour chart here. And we saw tested, enter. And we entered the trade right here, right then. 1 to 2 to target the gap fill, basically. And that's what happened. That's exactly what the trade did. So we had a little bit of luck here, a little bit, because we had like a big fake out to the downside, which like it almost hit our stop loss. So you got to push your luck at times as well. Like that's the thing. We trade probabilities. We don't know what the market's going to do exactly. Nobody knows. That's why we use statistics and rules, and we do all this analysis for exactly these things. So, and then, we got not stopped out, and it immediately went to target. So beautiful trade. And that's why, like, if you remember that, if you go through your journal and how you actually sat through this trade, like, look, this is hours and hours and hours and hours. So it's not like I'm explaining it here in a couple of minutes. And that's sort of the thing, that as you learn your strategy and it works for you, you just become an expert of doing it, So it's not something that you are stressed about or afraid. You're super patient. You know exactly what you're looking for. Of course, you got to have a little bit of luck here and there. It's just part of, luck is when preparation meets opportunity. So in this case, that worked out fine, And even if it had been stopped out, it's fine. I took a 2-to-1 risk. Remember, it's only one trade out of thousands in the track record, okay? And so the learning is, this was an aggressive trade, certainly an aggressive trade. And it confirmed that the strategy approach even works on the smaller time frames, especially with the zones on the 1 hour. You saw that, right? Now, if you wanted to know the exact statistical relevance on the 1 hour chart, you could probably also do a lot more research in that direction. If you wanted to trade the exact same strategy, the same principle on a much smaller time frame, this would be the way to start researching it. I don't want to do that. Why? Because I don't want to sit on a 1 hour time frame all the time and try to, navigate through that war zone on a daily basis. I like that a lot more hands-off type of approach. I explained it also in my strategy development video of that exact strategy, that what was my target. I wanted to have a strategy where I don't need a lot of screen time and all of these things. So that's why, but if you wanted, you could now dig deeper into that principle on a smaller time frame, because here it clearly showed that it works. And that dance on a volcano, for some people it might be, how can I say, it could eat you alive from the inside. It could trigger wrong behavior. It could make you stressed out. But when you approach all of that from a really, from a standpoint of skill set, of data, of training, then you are prepared. And that actually tells me, I love that quote of Jesse Livermore. Obviously, he's one of the GOATs ever, speculator stock trader from 1877 to 1940. And he had that famous quote, only the game teaches you the game. So there are always some discretionary aspects to having that kind of success, right? 2,789 trades, 20,200 pips of profit. Nonetheless, the method is simple. And the rest, a lot of it is just training, execution, review, documentation, the whole process that I teach, basically. So, and why do I do that? Why am I so firm and convinced about it? I have a level of knowing that this works, not like a conviction only, because it does. Don't argue with data. So that was trade number 2. I love just thinking about it.